This is Exchange Traded Fridays brought to you by ETF.com. I'm Sumit Roy, Senior Analyst here at ETF.com. As I'm sure you're well aware, it was a big week. As promised, newly inaugurated President Trump came out with a bang in his first few days in office. We're going to talk about everything that went down with a particular focus on the ETF impact. There's a lot of action there, so you don't want to miss it. Then we'll switch over to a completely different topic where we'll discuss how legacy mutual fund companies are embracing ETFs and entering the industry. We got a lot to get through, so let's get started. Joining me today are my fantastic colleagues, Wealth Management Editor Jeff Benjamin, Research Lead Ken Tooney, and Contributing Editor Ron Day. What's up, guys? How y'all doing?
Morning, Sumit.
Hey, Sumit, how you doing, buddy?
Good to see you all. I want to start off by talking about Trump's first week in office and the impact that we've seen there. We got a lot to get through, tons of action in the markets. Ken, I know you follow these things closely. What stood out to you during Trump's first week? Any surprises?
I wouldn't say any real surprises. I mean, I was pretty much ready for anything. I knew with the executive orders being signed, what we're watching clearly is, crypto, Trump's crypto task force and things like that. Investors are looking for almost really just looking for reasons to buy. Bitcoin crossed over another record on the day of the inauguration. After Trump didn't talk about crypto explicitly during his inauguration speech, it dropped down a little bit. But those over the last week, funds like the spot Bitcoin ETF, IBIT, the largest spot Bitcoin ETF, is one of the top performers. Also, sector ETFs that we've mentioned before that could be, so-called Trump trade ETFs, like the XLF, Financial Select Sector Spider Fund. Financials are doing well. Also, part of that is corporate earnings look good. But so I see a lot of investors reacting quickly. The other big mover was the announced Project Stargate a couple of days ago. Right now, it looks like a lot of hype, but you never know. I mean, Trump is someone who definitely makes big announcements, and then it's hard to say whether they follow through or not. But stocks like Oracle and Strategic Partners and that Project Stargate are rising. But we're talking about ETFs broadly, tech sector ETFs like the XLK, they're all big. So I'm seeing crypto and technology rising on those things the most.
Yeah. A lot of big announcements, and we're going to find out if they lead to anything. I want to, dive a little deeper into the whole crypto thing, Ken. Trump, of course, on the campaign trail, he was very supportive of crypto, and it seems like he's following through and doing everything that the crypto industry wanted him to do, starting with the creation of this crypto task force that's going to be led by Hester Peirce. She's, of course, a big crypto advocate, Bitcoin like that. But funnily enough, while Bitcoin was flirting with record highs this week, Ether, the second biggest crypto asset by market cap, was actually down 8% since last Friday, which is a pretty big drop for the world's second most valuable crypto asset. And that essentially has to do with the Trump coin. If some of the people listening might actually be familiar with the fact that Trump launched this meme coin like 2 or 3 days before his inauguration. Came out of left field. No one expected this, but this Trump coin was actually launched on the Solana blockchain. And the Solana blockchain is seen as a competitor to the Ethereum blockchain. So that kind of took the wind out of the sails of Ether. And we see Ether down 8% week over week. So I thought that was interesting. We're, of course, seeing a lot of filings come through as well. Crypto ETF filings tied to Dogecoin are out there now, believe it or not. I know we made a bet, I don't know, a few episodes ago, whether we'll see a Dogecoin ETF this year. I want to highlight, I was one of the people who thought there was going to be a Dogecoin ETF. I don't know who else agreed with me, but maybe we'll see that this year. But even crazier than that, a Trump coin ETF filing has been made. So that I think is going to be the litmus test. Do we see Dogecoin and Trump coin ETFs this year? If so, things are reaching a whole nother level of, permissiveness when it comes to crypto ETFs.
One of the
Right.
things over the past few years has been this effort to legitimize crypto. As we've written about loads of times, financial advisors are still, seeing this as somewhat of a, an emperor's new clothes kind of thing, that there's, no real assets backing it up. But it just seems what's going on now really undermines those efforts to create, like a legitimate market. It seems like we are maybe headed for kind of like something really kind of like a hysteria, like really, I mean, I just don't know how this, Trump coin and like these, it's just crazy. How does this legitimize crypto? It just seems to reinforce the perception that it's a, kind of a freewheeling, like a
Yeah,
racket.
it definitely reinforces the perception that it's kind of a casino, right? Because meme coins are basically gambling tokens. So I don't know. I'm still a believer in crypto myself. I think there's going to be useful applications down the line, but the Trump coin and the mania surrounding meme coins doesn't really help at least the reputation for the industry when it comes to ordinary people.
This is pretty much breaking last night and just ran across my radar this morning, is that Bitwise actually has filed for a Dogecoin ETF. So you win that bet, Sumit. I just wanted to add that there.
Yeah, yeah. But we still have to see it get approved, right? So we're seeing this
Right.
flurry
Yeah.
of filings now. Now the real test comes, is the new SEC going to approve these ETFs? Which ones are they going to approve? Is it just anything, literally any crypto asset can be wrapped into an ETF now, or are they going to be um, more discerning, only certain ones? I don't know, Solana, and the big ones. I don't know. Are they going to go by market cap, liquidity? What are they going to go by? Because Dogecoin is a big asset. It has a market cap of like $40 billion. So that I think has a good shot at becoming an ETF. We'll see.
I don't know. It
We
feels like
will.
the adults have like fled the room,
Yeah,
which was a
yeah.
complaint in the last administration.
Yeah, there's a lot to unpack here, but we're just gonna have to wait and see what happens with that. I know, Ken, another thing you mentioned was the whole Stargate initiative. This was big news during the middle of the week. President Trump was in the White House and he stood next to Oracle CEO, the CEO of SoftBank, as well as the CEO of OpenAI, and they announced this $500 billion investment in AI infrastructure. Just a massive number that really shocked a lot of people. $500 billion over the next 4 years. But I also noticed there was a lot of skepticism about that number, right? Where's this $500 billion going to come from? That's more money than some of the massive tech giants like Microsoft, Meta, and Alphabet are investing in AI. So it remains to be seen whether, this type of investment is really going to happen. But it did really lead to an increase in sentiment among the beneficiaries of the AI investment. Stocks like Nvidia, we've written about a lot. Stocks like Broadcom and other AI infrastructure beneficiaries rallied on this news. So we'll see. I mean, the semiconductor ETFs, they were hot in 2024. We'll see if they can continue to be hot in 2025. One thing people have been really talking about is the fact that Nvidia essentially has been flat for 7 months now. It made it an all-time high around 135 back in June of last year. And since then, it's been hovering around that level, give or take. So that kind of has been the leader in the AI trade and the semiconductor trade. We'll see if Nvidia can break out of that range. After the Stargate was announced, I think it got as high as 147 or 148, but it still hasn't really broken out to new all-time highs yet. We'll see what happens with that. So what about you, Jeff? You've been kind of quiet back there. Any observations about Trump's first week?
I think I've already said this to you guys offline that I think a week is a little short period to be judging a 4-year presidency or even in a first kind of foray presidency, even though this is technically his second term. my feeling on Trump is the way I've felt all along, is that if he says he's going to do something, you can pretty much expect him to do it, whether you like it or not. He does. He has made some. He did through his campaign made obviously a lot of those conversations about being a pro crypto guy. Frankly, I thought that was kind of pandering, and but that's another thing that he's known for. But also, it does appear to be working. It's driving Bitcoin, at least since the election. And really since he took office in the short period. I think Bitcoin's up around 105,000 right now. As far as the regulatory side goes, keep in mind, Gensler, for all his many faults, he's the one that approved the crypto ETFs that we now have on the market, or at least under his leadership. And Hester Peirce, as you pointed out, Samit, she's been referred to as the crypto mom. I know I've heard her directly say she does not like that title, but she is at least she's more open, at least to crypto investments than many others on that commission. Her leading this, I think, is a good sign. The fact that they have a group that's specifically looking at digital currencies and digital currency investing is a really good thing. It's a little bit shocking that they would have allowed two ETFs or ETFs investing in two different cryptocurrencies without having something like this in place. This is, remember, essentially a brand new asset class. But I mean, that's kind of my thinking on this. I'd like to come back in a month or so and do an evaluation on Trump's first few weeks after some of these things have unfolded. But basically, come on, it's Thursday morning. He was inaugurated Monday afternoon. It's basically adds up to 3 days, and a lot of that time was spent signing executive orders as well.
Yeah, fair enough. There's a lot of hand-wringing on X about the fact that Trump hasn't spoken about the strategic Bitcoin reserve yet. A lot of the crypto people wanted that, but I mean, come on, it's only been 3 days. There's plenty of time for him to potentially talk about that. So maybe a month from now, we'll have more news with regard to whether we actually going to get a strategic Bitcoin or strategic crypto reserve or not. But another thing you said, Jeff, struck me, and that's, Trump usually, whether you like it or not, does what he says he's going to do. And one of the big things that he was talking about on the campaign trail, of course, was tariffs. And a lot of people expected he comes into office, he's going to institute big tariffs. And I think people were kind of relieved that on day one, he didn't, slap these massive tariffs on some of America's trading partners, but he did talk about it. And he said, come February 1st or something like that, most likely tariffs are going to start to be implemented. And he said, he threw out numbers like 25% on Canada and Mexico, 10% on China. So we'll see if that happens. I was looking at the ETFs tied to those countries, and there wasn't actually a big downside reaction to those comments, but we did see not huge, but significant declines in Canadian ETFs, Mexican ETFs during December, when Trump was kind of going back and forth with those countries and threatening tariffs. So maybe people are saying, okay, they're not going to be as bad as, maybe feared. Maybe the timeline could get pushed out, something like that. So now people are kind of wading into those ETFs. We'll see what happens. It's still, a couple of weeks at least until these tariffs go into effect. Maybe they'll get pushed out even further than that. Another thing people are keeping an eye on are taxes, right? I mean, a promise of Trump was to cut corporate taxes. Last time he was in office, he cut them all the way down to 21%, and that fueled quite a significant rally in the S&P 500. I remember 2017 was one of the best years for the stock market in history because of Trump's tax cuts. And best year in history, I mean, the stock market went up a lot, but it hardly went down. It was one of the least volatile years on record. The market just kept grinding higher and higher, and it's thanks to those tax cuts. So we'll see if he can get those tax cuts down even more. This time, I think he threw out the number 15%. But of course, there's concerns about deficits and how are you going to pay for these tax cuts. So we'll find out a lot more in the coming weeks. Like Jeff said, it's only been a few days. So we'll see. So I think that's a good place to switch gears a little bit. We've talked about Trump's first week in office. Now I want to turn back to you, Jeff, because I know you wrote a story on how several legacy mutual fund companies have entered the ETF space. Can you talk about that?
Yeah, this is not a new story. Obviously, the mutual fund industry has been migrating toward the ETF space since the first ETF was launched in, well, 32 years ago this month. That was SPY. But what is kind of interesting to me, and we talk about this in the newsroom a lot, is that when we see one of these old, really old mutual fund companies coming into the ETF space, we're kind of like, oh my gosh, I sometimes didn't even realize that they didn't have an ETF yet. And if not, what are they waiting for? And over the past week, I've written about 5 legacy, I call them legacy asset managers because they've been around for a long time and they're kind of clinging to things that are not ETFs right now. But 5 have entered the space in the expanse of 5 days, essentially. You got 175-year-old Lazard Asset Management, 63-year-old broker-dealer Raymond James, 43-year-old Thornburg Investment Management. Those are 3 examples of really old companies that are just now kind of getting into the ETF space. I mean, and the handwriting has been on the wall for a long time. But last year, for example, over $1 trillion went into ETFs, while 600 billion moved out of mutual funds, and that's a trend that has been going on for a while. Another, I think, a big example was in December. We saw MFS Investment Management. This is the company the Boston-based company that launched the first mutual fund to U.S. investors 100 years ago. They, on their 100th anniversary, they make their debut into the ETF space. My point on all this is that I mean, this is only going to continue. I don't know how many other companies are out there that are still hanging their hat on mutual funds and hoping that, I mean, it just looks like a category that is going to continue to gradually bleed assets. I mean, granted, they have basically almost a monopoly in the 401k space, which is not small by any measure. And that's, I think, where a lot of people are holding on to. But, if ETFs or something else more user friendly than mutual funds ever gets into that 401k space, and I can't believe it's not going to happen. I mean, it's just kind of difficult to see what's going to happen to those mutual funds and those mutual fund companies.
Yeah, it's interesting, Jeff. You're mentioning these companies that are 100 years old, 40 years old. Some of the oldest mutual fund companies, they're just now entering the ETF space. Is it because they're so old, you think, that they're moving so slowly? They're just so used to the old ways?
I don't know. And the funny thing is, whenever I write these stories and I talk to the companies, I always ask them the same thing. Politely, what took you so long? And they kind of give you the same, kind of politically correct answers. Oh, we want to make sure we have options for all of our investors and stuff like that. But I mean, frankly, how many financial advisors and individual investors are looking at a mutual fund versus an ETF and saying, yeah, I think I'd rather have the mutual fund because it's less liquid, it's less transparent, it costs a little bit more. I mean, if they're side by side and essentially the same thing, you're going to go with the ETF, I would think, unless it's in a 401k plan. I don't, it's remember, these are usually, especially you got companies that are this old, they're big operations, and they can't turn on a dime. But 30 years ago, you could have said, yeah, they're going to take their time, and figure out this ETF thing. But I think the ETF thing has been figured out. And I can't help but wonder what the kind of the near and long-term plan is for companies that are not in the ETF space yet, and they're managing billions of dollars.
Right. Yeah, Jeff, when you were talking, I was thinking the same thing. It's kind of, like the metaphor of the large ship having to turn, but also it's, ETFs are the profit margins are thin. And so it's just it just wasn't a good financial choice for them at the time. But I think, kudos to the companies who did shift earlier. I mean,
Mm-hmm.
Vanguard is definitely a traditionalist in terms of how they invest, and they shifted over to ETFs, 20 years ago. So yeah, I think there probably is kind of a bottom line, kind of profit margin thing, and just kind of hoping that mutual funds will stay on. But yeah, another thing you said, Jeff, the 401k. I mean, when ETFs are tradable in a 401k, I mean, that's pretty much the final nail, I think.
Yeah, yeah, absolutely. And I don't want to sound like being too hard on mutual fund companies. They obviously serve a purpose. They've been doing this a long time. Their portfolio management is sound, or they wouldn't have lasted this long. But it seems like a lot of these companies are kind of clinging to the idea that something like a ETF share class will be approved by the SEC. There's I think more than 36 companies now, mutual fund companies have applied for that exemptive relief, which has so far only been granted to Vanguard, which is really how Vanguard's ETF industry got started. They basically started bolting these ETF share classes onto their mutual funds. But all the people applying for it now are applying for active mutual funds with ETF share classes. And the SEC, they're not on any kind of timeline. They don't have to reply at all. And it doesn't look like this is one of their priorities, especially now under, as we talked about in the earlier segment, the new administration and the new leadership at the SEC. So I think that's going to be something to watch, these ETF share classes, because if they do get approved, that's going to be floodgates. We're going to see a lot of new ETFs coming to the space. But until then, you just got to assume that these mutual fund companies are going to continue to fall. And by fall, that's not even the right word. It's not falling to basically start launching an ETF, but they're going to move into the space. Yeah. And we talk about it a lot also, but I'm still looking for the list of mutual fund companies or asset managers that don't have an ETF yet. And keep in mind also, of the examples that I gave earlier of the companies, the legacy or older firms getting into the asset management or the ETF space, some of those are financial advisory firms that are finding it makes sense to take some of their internal models and wrap them inside an ETF. So it's not just mutual fund companies migrating. It's, Raymond James Raymond James has an investment management arm that is launching their ETFs, but still they're essentially a giant broker dealer with 9,000 financial advisors as a distribution force.
Right.
So it's coming from a lot of directions.
Yep, absolutely. And we're going to continue following this story in the coming weeks, the coming months, and the coming years as well. I think that's a good place to wrap it. I want to thank our listeners for tuning into Exchange Traded Fridays. Remember, if you haven't already, subscribe and follow us wherever you get your podcasts. And if you have a question or you want to share your thoughts, join the conversation with us on X. Our handle there is ETFCOM. Catch you next week.